Hello everyone, welcome to the third lecture of NGO. Today again, same like the last lecture, I'll be solving question 3 and I'll discuss question 4 and all of you will be trying that on your own. So take out question number 3 that we'll solve right now. Welfare Trust has made available the following information for the year ended 31st December 2019. Income from services market as income from operations, so IOA. Then finance cost F, entrance fees, fees and subscriptions F&S, annual subscription F&S, program fees F&S, administrative expense A, grants and donations from central government G&D, salaries and wages employees benefit E, allowances and bonus employees benefit E, general fund in the nature of promoters contribution, so GF-P. Okay, general fund in the nature of promoters contribution. Corpus fund CF, contribution to provident fund, employees benefit expense. Grants related to freehold land will come in general fund related to non-depreciable assets. Refer to the summary, I made you write this in the first lecture. Example I gave you, what is general fund in the nature of non-depreciable assets? That is grants related to freehold land. Earmarked fund is designated fund. Restricted funds RF. Secured and unsecured loans are borrowings B. Current liabilities and provisions CL. Fixed assets FA. Investments I. An additional fund contributed by promoters during the year will add in corpus funds. Now transfer 10% of income to designated fund. So one effect we will minus in income and expenditure account, and second effect will add in designated fund. So all of you put tick on this earmarked fund or designated fund, there we have to add it. Subscription fees received in advance means pre-received income. So one effect we will minus from fees and subscriptions, put tick on annual subscriptions, there we have to minus, and second effect will show it in current liabilities. And due but not received 25 lakhs. So due but not received means one effect we will add in fees and subscriptions, and second effect we will show it in current assets. Now 25% of program fees is to be capitalized. Capitalized means 25% amount we will minus from program fees, okay, and minus in fees and subscriptions, put tick on program fees also, and second effect we will add in corpus fund. So put tick on corpus fund also. Capitalize means you'll add in the capital. Here capital is the corpus fund. So 25% amount will minus from fees and subscriptions and add in corpus fund. Salaries unpaid 25 lakhs. So salaries unpaid will add in employees benefit expense, that is salaries. Put tick on salaries and wages. And unpaid, so we'll show it in current liabilities. And 20% of total grants and donations transferred to earmarked fund. So minus from grants and donations. Okay, whatever is the total grants and donations, put tick on that. There we will minus it. And second effect, it is to be transferred to earmarked funds. So we'll add in designated funds. You are required to prepare income and expenditure account for the year ended 31st December 19 and balance sheet as on that date. Now, the format is already discussed in the past lecture, so pause the video and make entire income and expenditure statement as well as balance sheet with the items also. Means you write those 4 incomes, then you write those C, D, E, F, do expenses except D. We'll write in addition, means we'll remove D and write administrative and general expenses. Then you make balance sheet format also, unrestricted funds, corpus, general, designated, restricted, loans, borrowings, current liabilities, and 4 application of funds also. Pause the video and make this entire format, then we make the schedules and do fill in the blanks. Pause the video, make it fast. Okay, let's start with it now. First we make the schedules. So schedule number 1 will start from balance sheet. Okay, first schedule will be for corpus fund. Now CF marked items. So 6,000 we record for corpus fund first. Okay, all of it on corpus fund 6,000 opening balance. Then what else is marked as CF? This additional amount contributed by the promoters 800 that we have to add in corpus funds. So I'll put it down plus additional contribution of 800 further. Okay, two items we have left out to do the markings. Current asset would be current asset and loan advances, and deposit would be loan advances and deposits. This 800 is recorded. Then in corpus fund we have marked this item. Okay, which item? This 25% of program fees is to be capitalized. You can see that program fees is 200 rupees. 25% of that we have to add in corpus funds. Okay, capitalized part. So here we'll add program fees capitalized 25% of 200. So okay, 200 is there, right? Yes, 200 is 25%. That is 50. Now, total would come to 6,850. Then second, after corpus fund we'll have general fund in the nature of promoters contribution. Okay, GFP. Now what item do we have in GFP? General fund in the nature of promoters contribution, 1,000 rupees, this GFP. So that we record over here. Opening balance 1,000. Now what do we have to add over here? Now there is no other item in the question you can see marked as GFP. So final balance of that income and expenditure account is always added over here. For that we will leave the space. Yesterday also we discussed it. So add transfer during the year. Okay, you leave the space for that. Then third item what we will have is general fund in the nature of non-depreciable assets. Now here we will record GFNDA item. So GFND with this freehold land, we discuss grants related to freehold land 500. That will come over here. Okay, grants related to freehold land 500. Only one item is there, so that itself will become the total. Then fourth item after GFNDA we have designated funds, DF marked items. We have this earmarked fund over here, designated fund of 200 rupees. So first you write opening balance 200. Now all other items marked as DF will be taken into consideration. Left side we don't have, right side DF we don't have. Adjustment 1. Transfer 10% of income to designated fund. Amount we don't do right now. Amount we'll know after we make income and expenditure accounts. We'll leave space for that. Add transfer from income and expenditure statement. That will come to know at the end. So we'll leave space for that. Then any other item marked in adjustment as DF. Fifth adjustment. 20% of total grants and donations are to be earmarked funds. You can see total grants and donations over here. There is only one item marked as GND, and that is this 1550. 20% of that 1550 would be transferred to designated fund. So, okay, 20% of 1550. So, further we'll add over here grants and donations 1550's 20%. As it is mentioned in the question, 20% of grants and donations is to be transferred to earmarked funds or designated funds. So 1550 into 20%, 310. Okay. Now total we will get only after we make income and expenditure statement, so we leave it pending. Now fifth, after designated funds we have restricted funds. So RF marked items. In restricted funds we have 350 opening balance, and I think there is no other item related to RF, so that itself will be the total 350. Okay, opening balance 350, that itself becomes the total 350. Then after restricted funds we will have, okay, borrowings. So B marked items, borrowings. In that we have this secured and unsecured loan of 250. Only one item is there. So secured and unsecured loans 250. There are no hidden adjustments in this question like interest on loan, etc. Secured and unsecured loans 250. That itself will become the total. And seventh, after borrowings we will have current liabilities and provisions. CL marked items. So let us look at current liabilities and provisions. CL marked items. On the left side we don't have, right side this current liabilities and provisions are directly given 200. So first we write that current liabilities and provisions of 200. Now other than that in adjustments what do we have? Okay, CL marked items. Current liability we have marked this 50 lakhs. Subscription received in advance 50 lakhs. Pre-received subscriptions 50. Then after pre-received subscriptions, what else is marked as current liability? Salaries unpaid. So unpaid salaries of 25 lakhs. No other item is marked as current liabilities, so totaling can be done. 250 plus 25 would be equal to 275. Then after current liabilities and provision, 8th would be fixed assets. FA marked items. Directly fixed assets are given 9,500 and there is no adjustment related to that, so directly we'll write that. Fixed assets 9,500 in outer column, and that itself will become the total. Then after fixed assets we'll have investments. I marked items. Directly investments are also given as 1860 and there is no hidden adjustment again related to that like we had yesterday. So investments 1860 and that itself will become the total also. Then after investments we'll have current assets. CA marked items. In current assets, we directly have current assets of 1650 first of all. Then after current assets of 1650, adjustment 2, you all can see this current asset is there of outstanding subscription of 25 lakhs. So outstanding subscription 25 lakhs, no other item is there. Okay, outstanding subscription 25 lakhs. Total will come to 1675. Then after outstanding subscriptions, we have, current assets, we have loans advances and deposits. LED marked items. Directly they are given 190, no other item is there, so that itself will be the total. Loans, advances and deposits 190, and that itself becomes the total. Now after loans, advances and deposits we come to P&L items. So income from operations, IOA marked items, that is 2850. Okay, only one is there, 2850 itself will be the total, no other item is there. That itself will become the total. Then after income from operations we'll have fees and subscriptions, F&S marked items. In that first we have entrance fees of 150. Okay, entrance fees of 150. Then after entrance fees we have annual subscription. Tick is there, so write it in inner column. There is an adjustment 1300. Annual subscription 1300, inner column. Now what adjustments are related to their subscription? Look at adjustment 2. Pre-received 50 lakhs we have to minus, and outstanding 25 lakhs we have to plus. Okay, 50 lakhs we have to minus, 25 lakhs we have to plus. So minus pre-received 50 lakhs and plus outstanding 25 lakhs. So 1300 minus 50 will be 1250, plus minus we write it in bracket, plus 25 would be 1275. Then after annual subscriptions we have program fees, F&S 200. That is also tick, so write it in inner column, program fees 200. Now from that we have to subtract capitalized. Okay, 25% is capitalized, so that we have to minus over here. 200 into 25%, that is 50. So outer column 150 will come. Then other than that, F&S, do we have any other item marked as F&S? No. So total can be done. All of you check it. 150 plus 1275 plus 150, that comes to 1575. Total would be 1575. Then 14th, after fees and subscriptions, grants and donations, G&D marked items. Very first we have grants and donations from central government 1550. There is a tick, means there is an adjustment related to that. Adjustment 20% we have transferred to earmark funds, that we will minus. Okay, so you have grants and donation of 1550, from the 20% we have transferred to designated funds. So grants and donations from central government 1550, from central government, minus transferred to earmark or designated funds 20%. 1550 into 20%, 310. If you subtract, 1240 total. Then fifth, so other incomes, OI marked items we don't have, so nil. Other incomes we don't have, so nil. Then after other incomes we have expenses. First, consumption of material, that is also not given in the question, so nil. Then after consumption of materials, D, we don't have. E, employees benefit expenses. E marked items will be taken over here. So employees benefit expenses, we have salaries and wages. Tick is there, so inner column 1000. Salaries and wages 1000 in inner column. Now from that we have to subtract or add. Adjustment is there, salaries and wages. Fourth adjustment, unpaid, so we have to add in employees benefit. Okay, unpaid of 25 lakhs, we have to add. So add unpaid 25 lakhs. Outer column 1025. Then other than salaries and wages, which else item is marked as E? Allowances and bonus is marked as E, 200. No other item is there and no adjustment. Allowances and bonus 200. Total will come to 1225. Then 18th, after employees benefit expenses, we have new item of administrative expenses. A marked items. Directly administrative expenses are given 400. No other item we have, so directly A 400. No other adjustment is also there. Administrative expenses 400. Total itself 400. Then after administrative expenses, finance cost. F marked items. Directly finance cost is given 400. No other item we have. Okay, in employees benefit we skipped out this contribution to provident fund 150. That also you all write it. Contribution to provident fund 150. So total will become, if you increase it by 150, then it will become 1375. Then finance cost. Directly finance cost is given. How much was the finance cost? 400. Okay, directly finance cost, second item is given as 400, and that itself again will become the total. Then 20th will have other expenses. There are no items marked as other expenses, so we'll write it as nil. Okay, so all the schedules are done. Just let us see if any item is not skipped out. This is covered. Then grants and donation is covered. Current asset is covered. Contribution to PF is covered. Secured, unsecured loans, current liabilities, fixed assets, investments, loans, advances, deposit. This we have to do yet when we make income and expenditure. Okay, this 25 also we have subtracted. All effects have been given, only that income and expenditure one is remaining. So let us make it now. Income from operations. Now we have done this working. So schedule number 12. Income from operations, we got how much? 2850. Okay, or if we do income from operations 2850. Then 13 fees and subscriptions we have 1575. Okay, fees and subscriptions 1575. Then after fees and subscriptions, grants and donations we have 1240. Then other incomes are nil. So total can be done 2850 plus 1575 plus 1240, that is 5665. Now material consumed is nil. Employees benefit expenses we have 1375. Okay, employees benefit expenses 1375. Then administrative expenses also we have in schedule 18 400 and finance cost also 400. So administrative expenses 400, finance cost 400, depreciation we don't have nil, and other expenses we don't have nil. So total will come to 1375 plus 400 plus 400, that is 2175. Now A minus B, that is 15665 minus 2175. So that comes to 3490. Now from that we have to transfer. Here we have transferred to designated fund. In this question what we have is transfer to, so that we will minus. Look at the first adjustment, 10% of income we have to transfer to designated fund. So 10% of this amount, 3490 into 10%, that is 349 we will transfer to designated fund. If we transfer 10% to designated fund, what will remain is 3141. will be the balance carried forward to general fund. Now first we'll give effect of these two things. 349, let us add in designated fund first. We have left the space over here, 349. So total final will come to 200 plus 349 plus 310. That comes to 859. And same way, second schedule. What is the final balance transferred to general fund? 3141. So 3141 plus 1000 will be 4141. Now we put the items in balance sheet. So corpus fund is 6850. We can write it in inner column. Call our unrestricted funds. Corpus fund 6850. General fund in the nature of promoters contribution 4141. Then general fund related to non-depreciable assets 500. And designated funds 859. Now we can do the unrestricted funds total in the outer column. To it 6850 plus 4141 plus 500 plus 859, 12350. Then restricted funds, we have done the schedule number 5, that is 350, and borrowings 250. Okay, 350 and 250. And current liabilities and provisions, we have done the next schedule 275. Current liabilities and provisions 275. Now we can get the total 12350 plus 350 plus 250 plus 275 13225. Now application of funds, fixed assets schedule 8, that we have 9500. Fixed assets as per schedule A 9500. Then investments as per schedule 9 1860. Okay, investments as per schedule 9 1860. Then current assets as per schedule 10 1675, and then 190. 1675 and loans, advances, deposits 190. So 1675 and 190. Now total can be done 9500 plus 1860 plus 1675 plus 190, that comes to 13225. So the balance sheet gets tallied. Now question 4, all of you will be trying on your own. So I'll discuss that question and then solution of that you'll find in You Will Learn app. Take out question number 4. Look at question number 4, all of you have to try it on your own. Solution you'll find in the You Will Learn app. Unnati Trust has made available the following information for the year ended 31st December 19. Income from services, IOA, finance cost, F, entrance fees, F&S, annual subscriptions, F&S, program fees, F&S, administrative expenses, A. Donations from all of these will come in grants and donations. Salaries and wages, employees benefit, allowances and bonus, employees benefit. General fund in the nature of promoters contribution, GFP. Corpus fund, CF, contribution to provident fund, employees benefit. Grants related to freehold land, just now we discussed GFNDA in the previous question. Earmarked funds, designated funds, restricted funds, RF. Secured loans, borrowings, unsecured loans, borrowings. Current liabilities and provisions, CL. Fixed assets, FA. Investments, I. Current assets, CA. Loans, advances and deposits, LAD. Then addition fund in nature of promoters contribution will add in corpus fund. Now subscription fees received in advance means pre-received 200 lakhs will minus from fees and subscriptions and show in current liabilities. So put tick on annual subscriptions. There you are going to minus it. Then due but not received 100 lakhs. Okay. Due but not received 100 lakhs means outstanding. So we'll add in fees and subscriptions and we'll show it in current assets. So in same fees and subscription, you'll add it and show it in current assets. 25% of program fees to be capitalized minus from fees and subscriptions and add in corpus fund. So put tick on corpus fund as well as put tick on program fees. And lastly, salaries unpaid 100 lakhs plus in employees benefit expense, that is salaries and current liability. So all of you put tick on salaries and wages. There you are going to add that. Okay. So you all try this question on your own and you'll find the solution in the You Will Learn app. That'll be all for this lecture. Next lecture will finish this chapter, and next lecture is very important. I'm going to take up income and expenditure statement in columnar form. Bye everyone. Take care.